Hi everyone, welcome to the session. Let's move on to the questions relating to irrecoverable debts and allowances for doubtful debts. So let's look at the first question. The account supervisor of the firm where you work has instructed you to write off the trade receivable account of Egan Limited as irrecoverable. Which one of the following entries will you make in the double entry accounts? Assume that the business does not use control account. Okay. Now you have been asked to write off. Okay. You have been instructed to write off the trade receivable account of Eagle Limited as irrecoverable. Okay. So in my previous video, I just discussed about the difference between irrecoverable debts and doubtful debts. So if you want to have more understanding about that, please go through my previous video. I have given the link above. So which one of the following entries will you make in the double entry accounts? Okay. So now since you are going to write off these trade receivables, when you write off as irrecoverable, okay, so it has to be removed from the accounts receivable account. Removed from accounts receivable account means you need to subtract the irrecoverable debt from your receivable balance. So therefore, uh, usually your receivable account will be a debit balance. It will be a debit balance. Let's say your debit balance is 1000 and you are going to write off, let's say, 100 dollars. So when you write off as irrecoverable, you need to credit your receivable account. So when you credit, your receivable balance will reduce. So therefore you need to credit the receivable account. Receivable account means your Egan Limited is the debtor, the customer. Okay, so his account has to be credited, and you need to debit irrecoverable debt account as an expense. Okay, so the double entry will be irrecoverable debt account debit and Egan's Limited credit. Egan Limited's account should be credited. So this is the correct answer. Okay, so now let's move on to the second question. A decrease in the allowance for doubtful debts will decrease profit for the year, be recorded in the trade receivables accounts in sales ledger, decrease the bank balance, increase profit for the year. Okay, now you are given four answers, of which you need to select the correct answer. Decrease in the allowance for doubtful debts. Now, I have already discussed about allowance for doubtful debts. If there is an allowance for doubtful debts, it will not reduce your receivable. Instead, there will be an allowance will be made, and in the statement of financial position, you need to net off against your receivable. Okay, so it will not be written off against your receivables. So therefore, now what will happen? A decrease in the allowance for doubtful debts. Now let's assume 31st December 2019. We'll take two scenarios, okay, just to understand the impact on the profit and loss account, statement of profit and loss. So 31st December 2019, let's say we had a receivable balance of $1,000. Now, let's say we made a provision, general provision, 5% allowance for doubtful debts. Okay, so that will be how much? 5% on 1000 will be 50. Then your net receivable will be 950. Okay, so what is the double entry for this? The double entry will be you need to debit your penal account, doubtful expenses. You need to debit doubtful expenses 50 and allowance for doubtful debts. It's in the statement of financial position. This is the allowance for doubtful debts should be credited. Okay, so you will credit on 31st December 2019 and 31st December 2019. So here you debited the doubtful expense account and allowance for doubtful debts account will be credited. Okay, so this is a double entry. Now at the end of the period, at the end of the year, the doubtful expenses will be transferred to profit and loss account to calculate the profit. So that 50 will be credited here, that will be transferred to the profit and loss account. However, this balance, this balance allowance for doubtful debts will be carried forward to the next financial period. So you need to balance off this account and you need to brought forward 1st January 2020 50. Okay, so this, since this is in the statement of financial position, and this also will be in the statement of financial position. Okay, so in this, if you take the extract of the statement of financial position as at 31st December 2019, so this balance will be under current assets. Okay, so this will be under current assets. Your receivable balance will be 1000 and allowance for doubtful debts 50. So this is this account. This 50 is this allowance for doubtful debts. So your receivable will be 950. Okay. Now, when you prepare, let's say, now let's take 31st December 2020 balance. The receivable balance, let's say the balance has reduced to 800 US dollars. So as of 31st December 2020, our receivable balance has reduced to 800 and we have made a provision of 5% allowance for doubtful debts. 5% on 800,000, let's say 40. Okay, so therefore our receivable balance should be how much? 760. Okay, now what has happened? You had a balance of 1000 and reduced to 800. So on this balance, we calculated the allowances for doubtful debts 40. Now, what is the impact? What will happen? We had opening balance of 50. Okay, we had an opening balance of 50 in the allowance for doubtful debts. Now in 31st December 2020, that balance will be 40. So the carried forward balance to the next financial year, 31st December 2020, should be 40. It's a credit balance. So 1st January 2021, it will be 40. So what is this difference? This difference has to be adjusted against the profit and loss account. Okay, so in the profit and loss account, now we had this profit and loss account, it will be a credit adjustment. Okay, so if you have to debit allowance for doubtful debts account in order to reduce the opening balance to 40, The allowances for doubtful debt should be 40. So therefore you need to reduce, and therefore you need to debit this account, you need to credit the profit and loss account. Okay. So doubtful debt expenses account will be credited, and this will be transferred to the profit and loss account 10. So 10 will be transferred to the profit and loss account. Profit and loss account will be credited with this 10. So profit and loss account credit means, okay, your profit will increase. Okay. So in the first scenario, we debited the profit and loss account. Doubtful debts expenses we debited, and therefore this will be transferred as an expense to the P&L account. So therefore the profit and loss account debit means, okay, your profit will reduce. So therefore in this particular question, a decrease in the allowance for doubtful debts. Okay, now what has happened? The allowance for doubtful debts account has reduced from 50 to 40. So therefore, what is the impact on the profit and loss account? What is the impact on the profit? The profit as a result of reducing the allowance for doubtful debts will increase, because simply this will be credited to the profit and loss account. So credit means it's an income. So therefore profit will increase. So therefore the correct answer is increase profit for the year. Okay, answer number D. So this is the answer for question number 2. Now let's move on to the question number 3. Statement of profit or loss of a business has been prepared showing a profit for the year 4,450. So you have statement of profit and loss. You have the profit 4,450. An increase of 350 in allowance for doubtful debts should have been made. Okay, increase in allowances, okay, will reduce the profit. Allowance for doubtful debts, okay, it's an increase in allowance for doubtful debts will reduce the profit, and also uh, an irrecoverable debt of 90 should have been written off. Okay, so there is a irrecoverable debt write off, irrecoverable debt written off 90. So therefore what will be the profit? So you need to calculate the profit. 4,450 minus 350 minus 90. So that will be 4,000. That will be 4,010. So therefore the correct answer is part B. Now let's move on to the next question. You are the bookkeeper at Buckland Limited. The following information is available for the financial year ending 31st December 2001, 2002, and 2003. Now you are given set of information. So based on this, what you need to do is you need to uh, you are to show the effect of the above transaction on the financial statement in the following table. Okay. Now you need to show the balances at the end of the financial year. You are given 3 financial year, 2001 to 2003. Okay. So you need to show the figures in the statement of profit and loss account and the statement of financial position. Okay. Now let's look at the 2001 information. What is given? 2001, the trade receivable balance at 31st December 2001 before writing off irrecoverable debts 84,900. Then irrecoverable debts written off 31st December 2001 700. Okay. So when you write off the receivable balance will reduce. You will never ever be able to collect this amount. So therefore, this 84,900 less 700 will be 84,200. So this should be your receivable balance. Okay. So when you write off this, you remove the balance from the receivable account. So therefore, in 2001, your financial position, the sales ledger control account consists of all the ledger balances, the debtors accounts, the total accounts of all the individual customers. The balance should be 84,200. Okay. On that 84,200, okay, we have written off 700. So when you write off, you need to debit your irrecoverable debt account. You need to debit, okay, and you need to credit the sales ledger control account. Okay, so once you credit, your balance will be 84,200. Okay, then 4% allowance for doubtful debts created as at 31st December 2001. Okay, on this balance, you need to create a general allowance of 4%. On this balance, you need to uh, calculate a general provision of allowance of 4%, which is how much? 3,368. Okay, please remember this amount will not be written off against the sales ledger control account. Instead, it will be credited to the allowance for doubtful debts account. It's a credit balance 3,368, and you need to debit the profit and loss account, the adjustment 3,368. Okay, so basically the double entry will be allowance for doubtful debts adjustment account debit and allowance for doubtful debts account credit. So this is debited because we treat this as an expense. So therefore we debit the profit and loss account as an expense, and this is a provision or the allowance we credit in the financial position until it is recovered. This will be lying in the allowance for doubtful debts account. We don't set it off, we don't write it off against the sales ledger control account. Okay, so there is a contingency. We have a doubtful against this amount. We may or we may not receive this amount. So therefore we have to uh, credit to an account called allowance for doubtful debts account. Okay, now let's move on to the 2002 trade receivable balance as at 31st December 2002. Now let's move on to the 2000. Let's move on to the next transaction. Trade receivables balances as at 31st December 2002 before writing off irrecoverable debts 93,100. Now we have a balance 93,100 in the receivable account. Okay. Now irrecoverable debts written off on 31st December 2002 500. So we need to remove this 500 from 93,100. So that will be how much? 92,600. So that balance will be 92,600. This has to be written off. This is irrecoverable. We will not be able to collect the money from the customer. So therefore, what we need to do, irrecoverable debt account, you need to debit and we need to credit the receivable account. Credit means it will reduce the balance. So therefore, your net receivable should be 92,600. Okay, on this balance again we have to make 4% allowance for doubtful debts adjusted in line with the change in the level of trade receivable as at 31st December 2002. Okay, so our receivable balance changed to 92,600. On that, 4% will be how much? So when you calculate 4% on 92,600 times 4% will be how much? 3,704. Now our allowance for doubtful debts increased from 3,368 to 3,704. Okay, so this balance increased. Okay, so increased means now when you take the allowance for doubtful debts account, we had an opening balance of 3368. Now this increased to 3704. So therefore, what you need to do is the difference has to be adjusted in the profit and loss account. Okay, so when you take the allowance for doubtful debts account, this has to be, if you take a T account, allowance for doubtful debts. Okay, so 31st December 2001 we had an opening balance of 3368. We credited this account and we debited our profit and loss account 3368. Now this balance will be carried forward to the next financial period. Okay, then 1st January 2002 brought down balance 3368. Now the balance has to be increased from 3368 to 3704. So our carried forward balance should be 3704. So when you balance off this 3704, 3704. So what should be the difference? So difference will be 336. So 8 plus 6, 4, 7, 10, and 7 and 3. So this has to be credited. So what is the additional amount to be credited to the allowance for doubtful debts? 336. Okay, so we have already charged 3368 to the profit and loss account. Again, we can't charge the amount that we calculated 3704 as the closing balance. So we can't charge this to the profit and loss account because this already we have charged the opening balance. So only the difference has to be charged to the profit and loss account. Okay, so therefore the profit and loss account charge should be debit 336. So this was in 2001, this will be in 2002. So therefore, what is the additional adjustment to the profit and loss account? 336 to be debited to the profit and loss account. Okay, is that clear? Okay, now let's move on to the 2003. 2003, the amount is 92,000. Now the receivable amount is 92,000. From that, irrecoverable debt write-off is how much? 600. So therefore, when you remove this 600, what should be your receivable balance? 91,400. Okay, so irrecoverable means we will not be able to collect the money. So therefore, we need to subtract this amount from the receivable. This will be the amount actually receivable from the customers, 91,400. So therefore, in your statement of financial position, you have to show your receivable as 91,400. Then there again 4% allowance for doubtful debts adjusted in line with the changes in the level of trade receivables. So on this 91,400, you need to provide 4% provision or the allowance. How much is that? 91,400 times 0.4 will be 3656. Okay. Now what has happened? 3656. So here the balance increased from 2001 to 2002. However, from 2002 to 2003, the provision allowance for doubtful debts account reduced to 3656. So that amount reduced by how much? 3704 minus 3656, 48. That 48 has to be adjusted in the profit and loss account. Okay. So first of all, we'll record the irrecoverable debt 600. 600 has to be credited to the receivable account and debited to the profit and loss account. Then the 4% general allowances of 3656, that will be the allowance for doubtful debts. And the profit and loss account, what has to be done? Now, if you take the allowance for doubtful debts, we had an opening balance on 1st January 2003, brought down balance 3704. Now, at the end of the year 2003, the balance carried forward should be 3656. So therefore, so what is the P&L impact? It is 48 has to be credited to the profit and loss account. 2003, it has to be credited to the profit and loss account, so that you will have the closing balance as at 31st December 2003, it will be 3656. So therefore, you need to credit the profit and loss account by 48. So here the allowance for doubtful debts adjustment should be a credit balance 48. It has to be credited to the profit and loss account. Okay. So this is the answer for this particular question. Okay. With that, I will conclude my discussion on irrecoverable debts and doubtful debts. If you have any questions, please comment below. I will see you soon with another video. Bye for now.